Hi, welcome to this video, day 21st of October. It's Sunday. We look at three trade setups. They all include the CAD. We'll look at CAD JPY, AUD CAD, and USD CAD, and we'll go to the charts in a moment. Now, over the last couple of weeks, we've focused on the currency, the major that we consider to be the most generally oversold, which has been the Japanese yen. Japanese yen showed some really decent strength to the upside, and we expect more to come. Now, on the other side, the most overbought major generally at the moment, in our view, is the CAD. And we think this week it could see significant weakness. We've also got a high impact event coming up, which is the Bank of Canada as well. Now, what we're going to do is we're going to go and look at the trade setups there. Do keep in mind, this is my view as of right now. It can change in line with the market conditions. If you want all our trading techniques and our daily technical analysis of 14 major Forex pairs, you can click on the link beneath this video and get live access to our member center. Right, let's take a look at CAD JPY first.
Right, on the chart of CAD JPY, I'll draw my levels in a moment. Now, we have done a couple of previous videos on this trade. It's going quite nicely, and hopefully we'll get some more out of it. So do the levels in a moment. Now, in terms of COT net traders positions, just for new viewers, if you're unfamiliar with this tool, it's a great tool for helping you keep your technical analysis simple, okay? Because it will focus you on big levels, and you'll know where the big money is positioned behind the chart. That's going to give you advance warning of entries, give you clues on where to put your stops, and also help you set targets. You can't do that from technicals alone. Now, if you don't know about the tool, you can just simply click a link beneath this video, and there's an explanatory video. Now, I just want to watch the video through right now. Just keep in mind what we want to do is always trade in terms of being with the commercials, the smart money hedgers, when their positions diverge away from speculators. Now, in terms of the positions, we're just expressing them as a simple ratio here. We can see speculators 3-1 in terms of long positions over shorts. They're pretty bullish despite the fall we've seen. Commercials, on the other hand, oppose them 3-1 in terms of shorts over longs. That's a divergence of 6, which is pretty decent in this pair. Now, in terms of the CAD, we view it as overbought. It's mostly on the interest rate outlook. An interest rate hike is discounted for this Thursday, 24th to the 10th, by the market. Bank of Canada expected to hike rates. Core inflation, a little bit below forecast. Consumer credit is slowing. There's some other economic fundamentals that are slowing as well, but I don't think that's going to be enough to stop the Bank of Canada hiking rates. So they'll probably hike, but there'll be caution about a January rate hike, which the market is also expecting. The Bank of Canada won't want to strangle growth too much or hurt the consumer too much. Okay, so they're going to be cautious. They're not going to sort of point to a January rate hike, in our view. If they do, that's discounted anyway. I think they'll be cautious. Commodity prices are slowing in terms of the price upside. Crude oil's had a big breakdown recently. More weakness to come. That's a major Canadian export, and all other Canadian commodity exports are topping out. Okay, so they're going lower. So that's a good reason for the Bank of Canada to be cautious. You've also got the potential for risk off at the moment. And trade tariffs, they're bearish for the Canadian dollar, certainly on the JPY being a safe haven. Now, in terms of, from our perspective, the reason we've been so enthusiastic about this trade is because, obviously we consider the yen the most oversold major, the CAD the most overbought. So from a risk-reward stance, it looks pretty good. Now, in terms of how we've been playing this trade, down here, commercials were pretty long, or heavily long, the CAD, and they remained long. Speculators were short till we got through 87. Then the commercials got rid of all their longs and went short. The speculators, after being hit here, decide to go long. And we got what we wanted at the time, which was a big blue up, a gap, another big blue, and hits 89, a weekly resistance level. And we want to go short. So we just want to see how things go into this 89 level. And did get through on the first candle, came back. Second candle finished red. We wanted to sell after that one, but it wouldn't come down far enough. Blue comes through, tail pokes through that tail. Then from our perspective, we think the buying's exhausted. So we'll just come through the double bottom, which was 88.60. Nice red takes it out. Then we're looking for the 20-day moving average. In any big trend, we want the 20-day moving average to break in our favour. Try to hold it, and that nice big red takes us away. And then we're just looking for the 20-day moving average to hold rallies. Try and get up to it there. Can't do it. Slump back. This blue tail can't take out the red, but we did still finish blue. So from our perspective, we're expecting lower prices, okay? So far it's nearly 300 pips, but there's plenty more to come in our view. And yeah, to get in on this trade, I think it's a great trade. Anyone wanted to get in from a risk reward stance, how would you do it? Just draw a trajectory in there, okay? I can get it. Sorry, I've skewed my line as per usual. There. That is first level resistance, okay? Bounce to it, couldn't take it there. That candle comes off, that candle can't reach it. So my own view is if we get above 86, sell it back through 86, then we could get above this level. It's not a line in the sand, it's only first level resistance. The really firm resistance, of course, is going to be 87 because that lines up with the 20. So if she gets up there and fails, I'd sell her. Our stop back from the 20-day moving average behind those candles there. Now, what if she doesn't rally? Where would you sell her? I like this level here. Okay, so what you do is get a big blue up here, finishes blue. This one gets up, sits back on the body there. Tail bounces from the level. We come down over here, tail bounces from level, tail, tail. That level's taken out, sell on weakness, okay? Where do I think we're going? The way the COT looks, and with the CAD so overbought in our view, and the yen so oversold, 84 is easily on the cards, okay? We'll overrun that in our view, we'll probably target these candles down here. But again, I'm just so bearish. I mean, obviously, the outlook could change. That level, 82.60, would be the first level I'd be looking for now. I'm also then looking for 81, and longer term, looking for 75. Okay, 81 though, if we get there, would be fantastic because that would be another 450 pips. And yeah, if you're coming in fresh to this trade as well, also offers good risk to reward. You go near enough a 3-to-1 down to that level. Obviously, you'll be trailing your stop down if it breaks in your favour. So for us, any rally, a sell, break lower, a sell. Now, in terms of with using the COT, just for new viewers, it does keep your charting very simple because you're mostly focusing on big levels, which are mostly round numbers, and you can make quite optimistic projections when you're using the COT because you know the buying and selling behind the chart. As regular viewers know, I love the COT. Anyway, this trade going well so far. Hopefully it gets better. We'll see. Now let's look at what I consider to be a really good risk to reward swing trade in AUD CAD. All right, we're on the AUD CAD. Both commodity currencies, both risk currencies. However, we favour the Aussie in the short term, just simply because the CAD is so overbought, and the Aussie is going to have a decent short covering rally in our view, which is backed up by the COT net traders positions. Speculators 3.3-to-1 in terms of shorts over longs, commercials 4.1-to-1 in terms of longs over shorts, divergence 7.4, so a little bit higher than CAD JPY and quite high in this pair. Now we follow this one in the cross rate section of our site, and we actually had a nice short trade from here and followed her all the way down, eventually came out above 92. Now we've switched to a long bias. Now, in terms of when we came out the short trade, we wanted to see penetration at the 20 and above 93. You can see we'd come up quite nicely, can't get through it, and now we've come in long on this blue here, 93.20. Oh, sorry, let me just draw a quick trajectory, which my mouse is stuck. So there, you can see we've basically come above the level, failed, found support at the 20, and then bounced. So I consider it a buy. In terms of the next level of support, it's there. You can have your stop behind that level. Just look for blue, really, in the coming week. If she's above 93.20, she's a buy. If she slumps back, just buy her back through the 20-day moving average. Where could we go to? The obvious level for me, just based on the COT, we should easily get to there. Okay. However, I think we could overrun and go to major resistance, which is weekly resistance, up at 96. So basically, it'll be about a 3-to-1 if we get up to here in terms of risk to reward. Just very, oversold still. COT points to more strength. We've taken out the 20. I just like it as a good risk to reward swing trade. Longer term, I do feel the Aussie's going down quicker than the Canadian dollar, but in the short intermediate term time frame, Aussie is going to have some strength. I think she could target that 96 level, which is also a big weekly level of support, but 95 certainly on the cards. We'll hopefully be able to trail our stop up. You can follow this in the cross rate section of the site, of course, on a daily basis. Now let's move to the last pair we are going to look at today, which is USD CAD. On our last chart, which is USD CAD. Now, in terms of COT net traders positions, there is no divergence here to give us clues. Okay, in terms of the COT is neutral, it's at just 2 as a divergence. Okay, but the change in the positions is important for us because we'll look at the COT in previous weeks, and in terms of the COT back here into the 132 level, went to +7, which is quite high in this pair, with the commercials heavily short, specs long, drops in favour of the commercials, bit of a rally to the 20, rejected, accelerated move down. Here the divergence drops to 2, slightly more than 2, I think it was 2.2, but around 2. Commercials exit shorts, speculators exit longs, and that for us was an indication that the selling could be over. We won't just use the COT. That's oversold on a technical basis for us. We'll buy, then get stopped out. We then wanted to see the 20-day moving average. What happened if it came into it? Does get through it, gets back through it. Our latest position, member center, is at 130.30. We moved up to 131, so it's just a minor move so far. Divergence on this week's report is slightly lower than it was back here. CAD just very overbought, as we've been saying, and the USD has got solid long-term fundamentals, although a lot of people say it's overbought in the short term. It doesn't have much downside in our view. You can see I've drawn a trajectory up there, which is almost in line with the 20. If it was to pull back, where would it find support? I think you'd look here. Okay. So you got that, tail there, body, that body there crashes into the level. Then we break above it. I put another line there and there. This tail comes down to try and test level, but can't make it. Okay. I think, the 130 level, this line here, which is, just above 130, pretty solid support. And then those 2 red candles there and the mid. Do you want, your stop behind the bid, okay, or the 20-day moving average. Now, she's a buy on the dips in our view. Just want to see strength off that level, or buy on strength. I just feel, yeah, we finish right on the 131 level. If we go through 131.30, I think the USD is a buy. Now, in terms of where could we go to? The member center, I put 132 as our first level here, this cluster of candles. That should easily be on the cards if we get some upside momentum. But really, I'm looking for these two tails up here towards the 134 level, okay? The CAD is just so overbought, you know, on the fundamentals behind the charts, that is easily on the cards. And I'm really looking for 136. So basically, on this one, it's near enough, I think, about 2.5 to 1 in terms of risk reward if you're coming in on strength. To first level, obviously more to second level. Obviously, like I said, you can buy the dip as well. Now, obviously, I'm doing this video now, and the Bank of Canada is on Thursday. Obviously, you can view all these charts in the member center. We obviously be seeing how things shape up into the Bank of Canada, which might mean, obviously, we might take positions out, come in after the bank or whatever. We'll just have to wait and see. But just in general terms, the CAD just overbought on numerous pairs. I've just picked out 3 today. I could have picked out a few more. These 3, I picked USD CAD because a lot of people obviously follow it. Decent risk reward here. AUD CAD looks a really great swing trade for me. And CAD JPY has just been my favourite pair for the last few weeks and remains my favourite pair at this moment as we come in to the new week. Right, that is the video for today. I hope everyone has a good trading week. We'll be back soon, and we'll obviously do some more videos shortly, and we will be covering the CAD and obviously other currencies as well. Thanks again. Take care. Have a good day.